Morning, everybody. After our video yesterday, we had quite a few questions. So I wanted to break everything down in almost like a TED Talk style, the difference between investing in stocks and investing in flips. The general rule or consensus that you see a lot of times is when it comes to investing in stocks, a solid fiscal year can usually get you a return of about 10%. That same rule applies in the world of real estate. However, it yields you about a 12% return. To kind of break it down as simple as possible, and there's a lot of little things that go into this, but the way I like to explain it is if you take $100 and you invest it into several stocks, Acorn, Robinhood, things like that, you can turn that $100 into $110. However, in the world of real estate, through purchasing investment properties, putting in some elbow grease and doing a little bit of work, that $10 that $100 can become $112. In general, the way you see this is usually a property that you purchase. Let's say I purchase a $100,000 house in an area that rents very well. I'm usually able to rent it for 1% of its value or higher. So of course that's 12 payments per month. Let's say I buy a $100,000 house, renting it at $1,000 a month. That then returns $12,000 a year. Naturally, the two big things when it comes to stocks, they are super high risk, super volatile, and there are naturally ebbs and flows to the market. So sometimes you'll have 5% returns, sometimes you'll actually lose money during the fiscal year. However, in the same respect, real estate has those same possibilities. When the stock markets crash, real estate values can plummet. However, what I've noticed in general is that when it comes to purchasing these investment properties, you basically purchase them at a deal, which we can of course always help facilitate. You go in and you purchase a $100,000 house for $70,000. You then rent it at that $1,000 a month still, so you've already gotten equity in the home. You're building equity through the payments and through utilization of companies that offer home warranties. Heaven forbid something happens or something gets torn up by a renter, you can come in and you can basically offset that cost through insurance and warranties. So having dabbled in both, having our whole team having done this several times and looked into both and the logistics, I have to say that in general, not only do flipping properties offer like a more safe and advantageous thing, especially through insurance and warranties, but also it's admittedly not as scary as stocks and investing and everything. So what I find is that, I made this video for everyone because I come from that place where I want to help. So if you or anyone you know is looking to get into real estate investing, whether it's flipping properties or just purchasing them to rent or resell them to maximize your basically income there, we would love to help out. If you have any questions on this, please reach out. As always, you've got our number, our email, everything about it. And our big thing is we want to help everyone as a thank you, because we had an amazing 2019, and it is the minimum we can do to come in and share our knowledge to help you basically go in and maximize your profits now that you're shooting for that next level of fiscal responsibility. Everyone enjoy the rest of your day, and of course let me know if we can do anything to help here at Scurlock Group. Thank you.